Hello viewers, I am back with another episode of Bhaskar's Insurance for You and Me series. In the last 6 episodes of our series, we have discussed various aspects pertaining to health insurance products. You would have seen many news items in the last few days on various changes that are brought in health insurance products. In this episode, we will discuss on that. What are the major changes brought in by IRDA in health insurance? The insurance regulator IRDA has notified new regulations on insurance products effective from 1st April 2024 with the objective of helping in faster and innovative product development and protection of policyholders' interest. These regulations are applicable for life insurance products, general insurance products, and health insurance products. We will examine the changes that pertain to health insurance products only in this episode. The health insurance business was being regulated through IRDAI Health Insurance Regulations 2016 with subsequent amendments thereon. Under these regulations, guidelines were also issued regarding standardization of health insurance products and also the product filing in health insurance business. Together, these guidelines have provided for standardized wordings for various definitions, critical illness definitions, standard exclusions, permanent exclusions, product filing procedures, etc. As per the new IRDA Insurance Products Regulations 2024, the Health Regulation 2016 has been repealed and revised principles for product development, pricing and design are notified. With the repealing of Health Insurance Regulations 2016, these guidelines issued on standardization product filing also would stand withdrawn or rather nullified. While these new regulations effective from 1st April has provided a broad outline of the health insurance and other insurance products, more details on product categorization, product approval process, product management committee, etc. are expected to be provided by IRDAI through circulars in due course. We need to keep ourselves abreast of them as and when they are released. The few major changes introduced through the new regulations in health insurance pertain to topics like entry age limits, pre-existing disease, specific waiting periods, moratorium period, coverage for persons with existing medical conditions, grace periods. We will now discuss all these items one by one. Regarding the entry age limits, the earlier regulations had specified that all health insurance policies shall ordinarily be provided for an entry age of at least up to 65 years. An entry age of at least up to 65 years. It also specified that once a proposal is accepted and policy is issued, further renewal shall not be denied on grounds of the age of the insured. The new regulations do not specify any such age limitation. It reads as insurers shall ensure that they offer health insurance products to all the age groups. What it means is that earlier the insurers were required to offer new health insurance policies at least up to a maximum age of 65 years, and the policy renewal must be allowed without any age restriction. Whereas as per the new regulations, the insurers must offer insurance products providing new policies to persons even beyond 65 years of age. It is a major change. So as per the new regulations, health insurance products would be available even if a person of 80 or 90 years age wants to propose for health insurance for the first time. Because it's needless to mention that the underwriting norms of the insurer would be applicable for the proposal processing as it is applicable for other age persons, and the age will have a big impact on the premium payable. The second change is brought in pre-existing disease. We have discussed on the definition and waiting period for pre-existing disease in our earlier 13th episode. The definition and exclusion relating to pre-existing disease as per the old regulations can be summarized as below. Any condition or disease diagnosed within 48 months prior to policy starting date is considered as pre-existing disease. The policy starting date means the date of commencement of policy for the first time, subject to the insurance being continued or renewed without any break in cover. Also, the cover for pre-existing disease will be available after completion of 48 months of waiting period from the date of commencement of cover. So this cover is subject to the condition that the details of the pre-existing disease must have been declared in the proposal form at the time of proposing for insurance and must have been accepted by the insurer without imposing any permanent exclusions. Now, as per the new regulation, the period of 48 months, which I have referred earlier in two instances, appearing in the definition as well as in the waiting period, stands replaced by 36 months. So there is a reduction from 48 months to 36 months. So the disease diagnosed prior to 36 months before policy commencement is not considered as a pre-existing disease at all. Also, the claim occurring after 36 months of policy inception due to pre-existing disease is not falling within the PAD exclusion. How this change impacts customer is shown in the slide with a few examples. Assuming that the policy commencement date is 1st January 2024, the tables shown here in the slide, it shows the effect of change in the new regulation. If you look at the first table, if a disease was diagnosed between 36 months and 48 months prior to the proposal date, they were considered as PED in earlier regulations because the period specified there was 48 months, which will now be not considered as PED because the period has been reduced to 36 months. Similarly, look at the second table. If a claim arises due to a PED between 36 and 48 months after policy commencement date, they were being considered as part of the waiting period in the earlier regulations and are not covered, whereas in the new regulations, they would not be falling under the waiting period. Hence, such claims becomes payable. So the next major change is in terms of the specific waiting periods. As we discussed in earlier episodes, the expenses relating to the treatment of listed conditions, surgeries or treatment shall be excluded until the expiry of a specified period of continuous coverage after the date of inception of the first policy under the specific waiting period provision. So the period and the list of specified diseases, it is a product design feature and varies from product to product. In any case, the maximum period of such exclusion shall not exceed 48 months as per our earlier regulations. For example, some of the products may impose a waiting period of 24 months for procedures like tonsillectomy, hysterectomy, etc., and a waiting period of 48 months for joint replacement surgery or osteoporosis, etc. Now, as per the new regulations, that is the revised one, this specific waiting period cannot exceed 36 months. So, in the example shown above, the joint replacement surgery claim will become payable after 36 months of policy commencement instead of waiting for a period of 48 months. So the waiting period for these kind of specified diseases or specified procedures, wherever it was more than 36 months earlier, stands reduced to 36 months, thereby passing on the benefit of lesser waiting period to the customer. Where the existing products do not have any specific waiting period exceeding 36 months, this regulation will not have any impact. The next aspect is in terms of what is known as moratorium period. While the earlier regulations had a moratorium period of 8 years, that is the 96 months, the period stands reduced to 60 months in the new regulations. The significance of the moratorium period is that once the moratorium period is completed, no policy or claim shall be contestable by the insurer on grounds of non-disclosure, misrepresentation, etc., except on grounds of established fraud. This revision is helpful to customers who have made any non-disclosure or misrepresentation unknowingly or innocently. But any non-disclosure or misdescription with fraudulent intentions can still be contested by insurer. However, the insurer would have a challenge of establishing a fraud even when there is an intentional or fraudulent non-disclosure or misdescription leading to disputes. So this revision, in my view, is likely to lead to more disputes or grievances. While this provision was there earlier also, the reduction in the moratorium period makes it more attractive for non-disclosure by customers of high moral hazard, hoping that the insurer may not be able to establish fraud. There is another point which is specified in the regulations which pertain to the coverage for persons with existing medical conditions. The new regulations have a provision which reads as insurers shall endeavor to offer coverage for persons with all types of existing medical conditions. To repeat, insurers shall endeavor to offer coverage for persons with all types of existing medical conditions. This clause may encourage insurers to come out with specific products or specific underwriting rules for covering persons who are already suffering from certain medical conditions. Such persons were earlier being denied cover or were provided cover with certain permanent exclusions. So there could be certain relaxations expected from the new products to be developed by the insurers. The next aspect is pertaining to the grace period. The term grace period in health insurance policies means the period allowed for renewal premium payment after the premium payment due date and without losing the continuity benefits relating to waiting period and pre-existing disease exclusions. So earlier the insurers were allowed to specify the grace period as per their product design, and most of the insurers were allowing a grace period of 30 days for renewal of policies. But no cover was available during the period for which premium was not received. In the new regulations, the grace period is specified as 15 days where the premium payment is done in monthly installment mode and 30 days in all other cases. More importantly, it is also specified that coverage shall be offered during the grace period if the premium is paid in installments. So we have been discussing the various principles of insurance and the basic features of different insurance products like Bharat Grih Raksha, personal accident, health insurance in our series so far. The question now is, with the introduction of new IRDA regulations on insurance products, including health insurance products, whether the different aspects discussed by us in this series becomes obsolete. The clear answer is no, it does not become obsolete. The basic principles governing the insurance business remains same and will continue to apply. So there would be some changes to the product structure brought in through the new regulations, which we need to update ourselves. The points which we have discussed in the current presentation and also maybe in some of the future presentations, they are meant for updation of these provisions. So in this episode, we have seen the details of major changes introduced through IRDA regulations in health insurance products. I'll come back in the next episode with some more details on any of the general insurance products. Until then, bye from Bhaskar.